And consolidation markets is when we're just moving sideways, right? The price just chops around and we don't pick a clear direction. And this is where patience is very important, because if you're forcing trades, you will end up losing. We have to wait for the clean breakouts or breakdowns. And, this takes a long time to master because you can go, a couple days, few days, even like a week without taking any trades, but it's important to realize that every time you take a trade, you have a risk of losing money, right? So you want to always, always, always take the highest probability setups in the highest probability environments. And then we got the volatile markets. So this is when we're moving, fast and unpredictably. And this is pretty dangerous because, we could be all over the place. And it's just important when we're moving up and down very quickly, or if there's like news like FOMC, anything like that, just to focus on your risk, protecting your account. And this can be done by making sure your entries are precise. If you miss a move, you just move on to the next one. And most importantly, just don't take any impulsive trades. If price is moving fast and you don't have a set plan before that, then just let it go. There's no need to try and rush to get into a trade when these setups are always there. They always repeat themselves, right? There's no need to react emotionally. There's no setup, don't trade it. If you miss a setup, just let it go. Because at the end of the day, the most important part is to just protect your capital, protect your account, right? So adapting to the market is very crucial, and you have to change your approach depending on the environment and the type of market that we're in, right? To learn to control your emotions and to only take the highest quality setups, right?